Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 20th, 2023, and Bitcoin is on the verge of the first big move of the 2023 bull market, okay? The questions have been in the past few weeks, right? Is the bear market over? When will the bull market start? Can we go lower? All that stuff. At this point, all right, nothing is 100%. Not saying that it is. But at this point, in our analysis, I think we've moved beyond the idea that it's a likely scenario that we go and make a lower low, go back to 10 or 12K or anything like that. I think at this point, the focus on responsible, probabilistic analysis is, okay, upside targets. How will this matriculate? Okay? And, that's not necessarily because I advocate for overtrading the bull market. Let's be clear. I still am a firm believer in the idea that if you can read a bull market, right? If you can read a bull market, meaning you read the end of a bear market, your best move is to trade the bull market as a holistic move. Meaning, it's, you don't overtrade a bull market because probabilistically, you're more likely than not going to miss moves by trying to, nickel and dime the impulses. Meaning, if you, in your analysis on a high time frame, foresee the price going to this level, instead of trying to trade the probable 5 waves or whatever, however this matriculates up to reach these targets, instead of trying to trade every impulse and get out of the way of every correction, you just leave it. You're actually probabilistically more likely to have more returns than overtrading. Because remember, when you trade, and let's say you divest yourself of your positions here, or you sell some, you actually have to re-enter your trade here. Okay, that increases risk. That increases also the probability, if you don't time it perfectly, or if you underestimate this move, of missing out. Okay, the price is going to do what the price does. Bitcoin can go to $1 trillion. If you're not exposed to the trade, or you overtrade it and you miss much of the move, it doesn't matter where Bitcoin went to and from what. You're not going to take advantage of that. You see, you get the most benefit from not overtrading the high time frame move. That's what I'm basically trying to say. So that's the high time frame. That's my strategy, right? Do your own research. That's how I'm playing it. But on the small time frames, because this is a daily show, this is what we do. We look at the probable moves, how it's moving. Okay. Although the how may not necessarily mean, oh, we're definitely going to trade that. You don't trade every bit of your analysis. At least I don't. Okay? But I think it's still worthwhile analyzing. Why? Because it helps in, sharpening your sword. In increasing your ability to really understand how the market works. And if perchance your high time frame analysis was wrong, you're going to see it on the small time frames first, okay? And if it's correct, you're also going to see that corroborated or confirmed on the small time frames. So that's kind of like why we're looking at these moves granularly. I hope that makes sense. Now, what we're looking at here on the daily time frame is very probable. I know it seems to many like it's a harebrained scheme, like there's no way it can do this. Absolutely, my friends, okay? And I'm gonna tell you what. This analysis isn't as crazy as you think. Look at it. Here is your previous level right here. If you want to talk levels, if you're bullish, okay, what you want to do is, okay, sorry, this is not the only level. There's a clear level here. I'd put that over here, actually. Okay? And I have that designated by that blue box. And a clear level here. Okay? So, these two levels, what I believe is likely, okay? I don't know what's going to happen. But again, we're just playing probabilities here. It's very likely that the next move of Bitcoin's bull market, 2023 bull market, be a very strong move up all the way to this level here. Because honestly, you don't have much of anything in this region, right? You have a volume gap. You can turn on your VRVP or VPVR, whatever you want to call it. But actually, you can just see this with price action. The VRVP or VPVR kind of shows this, but it doesn't even do that great a job for this for some reason. So I'm just going to look at the price action, okay? Bitcoin has never, ever, ever been in this region right here. So it's not as if you look left, many years back, you're missing some price action in this region, okay? This is all there is between 30,000 and 60,000 or 69,000, whatever we put. So if you just look at this, you can clearly see between here, where we are right now at 21K, and this level right here at 33K, there's nothing. Do expect for us to cover that gap, that volume gap, quite quickly. But even more, because we're in a bull market, and I always say, any impulse, be it bullish or bearish, is just a matriculation of the price breaking resistances or breaking supports and retesting them as the other. Meaning, if you're bullish, what you're going to do is you're going to break resistances. This is the next major resistance right here at 33K. You're going to break that and then retest it as support. That's trading 101. You're basically dealing with support and resistance, okay? And you're flipping them. So if this is a bullish trend, what needs to happen is a flipping of that resistance into support, and it's likely to be done in this way given the volume gaps that you have on the chart, right? So from 20K likely to between 40 and 50K, right? Because you see the next big resistance is right here at 49, 48, 49K, 48K. So maybe it goes all the way to 48K, comes back down to this region between 33 and 34K, and then continues, okay? That is a very, very likely move for Bitcoin, right? Given what I just laid out. All right? And, yeah. That's what... I wouldn't be surprised if that happened. Could it be more? Could it be even more impulsive? Yes, absolutely. And that's part of why, as a trader, I go on the really high time frame, like you saw, go on my weekly time frame, and I'm not so concerned with how it gets to my targets, right? I have a general rough idea of when it will hit my targets, and what my target, or what that wave will look like. But again, don't concern yourselves so much with the how, because it doesn't help you make money, to be honest. You just wait, let it happen. And so again, I'm making this analysis not because I'm trying to micromanage this move. Don't micromanage the move. Just let it happen, right? It'll happen in the way it wants to happen. I just think this is a likely way that it happens. Yeah? Okay, that's the high time frame, daily and weekly. Okay? Definitely bullish, definitely, in for a big move, maybe to 48K, maybe to 40K, maybe to 38K. I don't know. It doesn't really matter, but that's just my speculation. Now, on the smaller time frames, what are we doing? Let's jump down. Actually, let's jump down into the 15-minute time frame. And you can see here, this is what we were dealing with yesterday, and we talked about this yesterday. This range here, we were talking about consolidation reversal patterns, right? And that once Bitcoin, this is the range, yeah? Once Bitcoin put in this consolidation move, this running flat correction, that what you should expect after this impulse was a series of AB bases, right? 2 degrees of AB bases and a pivot to be exact. And after that, you should get a continuation of the trend, okay? It seems as if, and I said confirmation of that would be to break this range right here, okay? And that's exactly what happened. We did 2 degrees of AB basing, and I counted it out yesterday, right? I counted this as a zigzag, so my initial break of structure, my A wave, my initial B wave, my counter, okay? My secondary A wave, what did I count? I think I counted this as my secondary A wave and my secondary B wave, and then this as my pivot, okay? And then this as my impulse. So you got 2 degrees of AB basing and a pivot, and you seem to have already broken the upper resistance of this consolidation channel. Very important. Even though, let's say you don't know anything about Elliott wave theory, don't know anything about AB basing, you have no such sort of idea of that concept, but you're just, you're a solid technical analyst, and you have a good grasp of support and resistance, that will get you very far. In that case, you simply see that this is a range, and this range has been broken to the upside there, retested. Okay, so let's zoom back in. So a lot of times, people overcomplicate things. Like the simple skills of reading, support and resistance will get you very far, I promise. Right here, you just broke it, retested it, and now you're off to the races, actually. So technically speaking, you are S-flipped. You flipped a resistance, okay? This upper resistance level, or this level of this range was resistance, right? It was resistance once, resistance twice, resistance 3 times, resistance 4 times. You broke it, you retested it, and now you're gone. Do expect Bitcoin to continue. And you can see this throughout the cryptocurrency market. It's not just in Bitcoin. Look at these levels, or look at these ranges, these consolidation ranges that we just broke yesterday. Actually, for Bitcoin, when did it break it? It broke it this morning, okay? It broke it this morning. But yeah, we said yesterday it was likely that if our AB base count was correct, that would happen. And now, what you're dealing with is another range. See, sometimes, it's helpful to know all of your complex, Elliott wave theory and all that stuff. It does get you somewhere. Guarantee it does. On many time frames, it gives you insights that would be difficult to, or impossible to have otherwise. But basic support and resistance, you have to master that. It doesn't matter if you're an Elliottician, if you're a Wyckoff trader, if you're a Gann trader, if you're a Ichimoku cloud trader. It doesn't matter. You need to master basic support and resistance. At the end of the day, that's all it is. And I usually tell this, 1 second, let me take a drink. My mentor, Jack Schwager, who is the author of the books, Market Wizard books, okay, the series of books that basically deals with all the traders, and he interviews traders with a minimum of 10 years of winning records, and he interviews traders, counter traders, prop firm traders, Wall Street traders, famous traders, no-name traders. It doesn't matter. You just need to show that 10-year track record. So consistent and proven winning. And there's so many different, this is kind of like proof based off of his work. You can prove that there is no one correct method. There is no one path. There are lots of winning traders that day trade, or winning traders that only trade positive, or meaning they're only long, or some that go both ways, some that only short, right? There's some that only swing trade. There's so many different types of winning traders. But one thing he always says, and I never forget this, one thing that brings them all together, one thing that they all have in common, is that they all have a great grasp of support and resistance. That's why if, I'm doing analysis, obviously my expertise is in Elliott Wave, you'll see me talking about support and resistance all the time, because that is a foundational piece of my trading knowledge, okay? And don't undervalue it. Spend time looking at your charts and understanding these concepts. They work. They're really powerful, okay? So yeah, we do want this. This is a range, and a range is nothing but support and resistance. It's support on the bottom, resistance at the top. Okay, now that you broke that micro range, that smaller range that we just talked about, where essentially you consolidated after this drawdown, okay? You've absorbed all of this supply right here. Now this is the markup, okay? Now for this markup, you've also have another range to break. So now the job, if you want to continue the trend, the larger trend, yeah, that took us from 15.6 to 21. If you want to continue that trend to, let's say, the 40s, what you're going to have to do is break, retrace, and break out, okay? You're going to have to break this range. So that is what we should be focused on at this point in time. So right now, you're seeing a minor rejection here, but excuse me, what you see is it's very likely, given that the consolidation at resistance is happening right on the edge. So usually when you get a rejection, I like to speak clearly. A lot of people say, oh, rejection. I would not consider this a rejection. I would consider this a consolidation at resistance. There's a difference. This is a rejection. This is a rejection right there. Okay? This is a rejection. Right? A three-wave move, corrective move at resistance. That's a rejection. When you start consolidating at resistance, that's not a rejection. That's a consolidation at resistance, which typically precedes a break of that upper resistance, okay? So that's what I see for Bitcoin, and that's why I see it in the immediate short term. I'm on the 15-minute time frame. When that happens, let's zoom out a little bit. Let me erase this and zoom out a little bit. Let's go on the hourly. And again, guys, your time frames should all be speaking to one another. The idea that, your random, if you have like a million different time frames that you're looking at, it doesn't matter. You can look at all the time frames you want. But one saying one thing, the other saying another, like they're schizophrenic, they're disjointed. It's not going to help your analysis. Get one story, and all the different time frames should be looking at that story from different vantages. That's it. It's like you're looking at yourself in the mirror from straight on. You're looking at yourself in the mirror from to the right, from the left, from up, from down. You're still looking at the same thing. They should actually work on one another, work off of one another to complete the picture. Different time frames shouldn't further confuse you, right? So now when we pull back and we go on the hourly time frame, we see the same thing. We're looking at this range, okay? You can say that this is the range and that you already broke that upper resistance, okay? That's one take. Now, if you zoom out, do you see? This is very possible. Actually, more likely than not, this is an accurate representation of what you're looking at. Just harder to see on the 15-minute time frame. Do you see? But both time frames are pretty much telling you the same thing. That you're in what looks to be a type of bull flag. This is the flag, that's the pennant, and you should get continuation, okay? Obviously, when we break it down, this was your running flat, this was your consolidation reversal, this is the continuation. But all in all, if you want to look at it from a higher time frame, and just like a simplified pattern analysis, all of this is just a consolidation in a flag, and eventually what you're going to get is what you're getting here, a retest of the upper resistance of this flag for a subsequent breakout. Okay, so Bitcoin, basically in layman's terms, Bitcoin is looking bullish for continuation. And furthermore, what we can say, and let's illustrate this point on even higher time frame, the 4-hourly time frame, what we can say is not only is Bitcoin bullish, but Bitcoin is about to put in a massive move because it is consolidating, again, same concept, it's consolidating at resistance. So it's both consolidating at resistance and consolidating on top of previous resistance as a new support, okay? So, two things. You can see what I'm talking about on the 4-hourly time frame. The top of this channel that I drew in, okay, is resistance. Okay, this channel, if you saw yesterday's show, represents the bear market consolidation, okay? For the bear market, 400 days of a flat correction, a 3-wave move down, okay? One of those moves, a B wave of that flat correction, I could just show you. Let me show you really quickly. Let me show you on the weekly. Guys, if you're getting value, please like, share, and subscribe. So, I said this yesterday. People think that this 3-wave move, which is a corrective move, if you know anything about Elliott wave theory, a 3-wave move is a corrective move by definition, okay? So this is, by definition, what we would call a bear market rally, okay? It was still great. People made gains. You even made a higher high. Awesome. That wasn't a bull market. A lot of people mischaracterize this as a bull market, and that was not a bull market. This was a bull market. This was a bear market rally. Actually, this is a corrective move. This is the middle part of a larger corrective move, okay? So this larger corrective move, 1, 2, 3, is a flat correction, okay? You have your A wave, you have your B wave, and then you have your impulse, a double zigzag, okay? We talked about this before many times on the channel. A little complicated, but it's an impulsive move, okay? So you've got these 3 waves, and all in all, this 3-wave move took about 400 days, okay? 400 and some odd days. And this consolidation took about 230 some odd days, okay? Those two together make up your bear market, okay? Because we use these terms and we just float them around, but it really helps to be technically precise. People say anything's a bear market, right? You can call a bear market on a 5-minute time frame. The bear market refers to the counter trend of a larger uptrend, okay? And the larger uptrend is this. That is the bull trend. This is the counter trend. all of this is the bear market, okay? This is the latter bit of the bear market, the consolidation, the sideways movement. Many YouTubers, speculators are saying, well, Bitcoin can't go up from here because it needs to go sideways more. Literally can't read a chart, okay? They see this as being downwards just because it's slanted down slightly, but it is a sideways consolidation in so many ways, okay? But this broke to the top, and that confirmed the end of the bear market, okay? Basically, you're turning that consolidation range from resistance to support. And so when I say that you're turning previous resistance into support, I'm referring to the fact that the upper boundary of this consolidation channel was just broken by the price and then retested as support. Okay, so that's one way that we are flipping resistance into support. And so going back on the smaller time frames, you can see that we are putting in, so we're above resistance, but we're also under resistance, okay? And that resistance that I'm talking about is this right here. And it's not as strong, okay? It's not as strong because it hasn't lasted as long as the bear market consolidation, right? This diagonal, to see here, this right here is 230 days old, right? It lasted the length of the bear market consolidation. And when you're talking about support and resistance, not all support is equal. Not all resistance is equal. Typically, when you're looking at the relative strength of various levels, whether they're orthogonal, right, straight, or diagonal, it really depends on the time they've spent, right? How many times, or it depends on how old it is, right? If it's a trend that's lasted thousands of days, then it's going to be particularly strong, much more than something that's only been established for a few days, yeah? So this is a 230-day trend. That was the important resistance broken to the upside and retested as support. This, however, even though we're below it, is not as strong, okay? Now let's go into the orthogonal resistance that we're at. Do you see? The only level that you can kind of see this, it's actually relatively weak. It's only as old as November, early November, okay? Which coincides with the FTX saga, you know, the FTX drawdown, or what people call the FTX drawdown, right? So that is what we're currently under. Don't expect that to be really hard to overcome. The chart tells the story that that's relatively weak. The big job was this right here, the 230 days bear market accumulation, already broken, already tested as support. It's pretty much free and clear from here. This is a straw man right here. That's nothing. So I actually won't even draw it on my chart because technically speaking, there's only one point of confirmation here. Like, it's completely not respected, you know? It's very, very, very lightly respected, if at all. You can say, yeah, there are not enough touch points for me to say this is a legitimate resistance that Bitcoin is under right here. So I would characterize Bitcoin as being above major resistance, testing it as support, now matriculating out of a small time frame channel, which again, because it's small time frame, don't expect it to be such a difficult task for Bitcoin to do. Very likely, again, all probabilistic, but according to the analysis, it's very likely that you do get your continuation. And as we said, on the really high time frames, on the daily, on the weekly, you can see there is what we call a volume gap in this area. So do expect that move whenever we do have it to be fast. It's going to take a lot of people by surprise, especially your 10K, 12K Bitcoin, 9K Bitcoin folks who have not closed their shorts or are looking for shorts. I mean, yeah. In any case, that is Bitcoin. Akanksha says, hello. I'm doing well, Akanksha. You were correct. 100% BTC broke out. Yeah, waiting for even more. Richard says, might gap open on Monday? We are real close. Absolutely. Akanksha's mentioning now the CME gap. What about the CME gap at 10K? Usually these gaps get filled up. I'm not a big CME gap guy. Again, I keep it simple. If somebody can give me the percentages of fills of these Chicago Mercantile Exchange gaps, then that'd be interesting to know. But I never look at that. And there's not really a reason to look at that. I think I last heard that there was one significant CME gap at 19,500. And the problem with all of these extraneous indicators, right? That would be an indicator, is that people actually get confused and they lose sight of what's important, okay? Maybe, let's say, for argument's sake, filling CME gaps on a Bitcoin chart happens 70% of the time. 70% of the time is good, but it's not that reliable. It's not as reliable as something that, that's just as reliable as a pattern, right? That you see on your chart and that you measure through Investopedia, saying this pattern, once you see it, it breaks out, 50 to 75% of the time. I mean, that's how reliable it is to me. Like, I don't really look at that. And like I said, I heard that there was a CME gap at 19.5, and so there's some traders that are legitimately looking for that fill at 19.5 or something like that. But I think that personally, it's a distraction. As a trader, as a speculator, I'm going to put my money quite literally on what has proven reliable, and I'm going to focus my analysis on just a few things that I know work. So, high time frame, support and resistance analysis, my Elliott wave analysis, my main indicators on multiple time frames, looking at the DXY, so on and so forth. I'm not going to worry so much about CME gaps, and nor do I even know. I can't even tell you exactly what that is and how it's generated and all that stuff. I don't really know, and I don't really care. That's just my answer to that. Richard says, or Justin says rather, the gap is at 19,990. Yeah, I've heard so many different things. I've heard who was it? Crypto Zombie. What's his name? That's a channel's name. But yeah, the Crypto Zombie channel. I heard him say that the gap was at 19,950. See, Justin says 19,990. I guess those are similar, right? But again, I think that is a distraction, because if I'm waiting for that, I mean, it's just I then have to ignore everything else that I just discussed. All the support and resistance, all the analysis that I spend time doing, not just on Bitcoin chart, but on all the other charts that are telling me it's very likely that given a clean break of this and a retest of that I'm going up, that I'm going to turn around, come down, and then break down all the way down here. Like, it's unlikely. It's unlikely, especially given that, some people are thinking, no, it's just going to be a quick wick. So when you're talking about a quick wick, this is your quick wick. That is the capitulative move of your corrective pattern, right? Here's the corrective pattern. For everything in my tool belt of analysis tells me that this corrective pattern is finished. And that tells me it's finished, right? Just looking at Bitcoin's chart, right? Not even adding into that, what I'm seeing on other charts, corroborating that read. Do you see what I mean? So, like, focusing on the wrong thing. There's so much information, right? It's 2023. Everybody has ChatGPT, Google. We all have access to each other's YouTube feeds, Twitter. There's a wealth of information, but now I think it behooves the speculator, the investor, the analyst to be discerning. You have to know what's important. Like, I take everything in. Like, I watch BitBoy Crypto because he does such a good job of pulling together all these disparate streams of information. Some of them are completely useless. Some of them are hilarious. Some of them are, good to know. But they don't all inform my analysis. Probably none of them, to be honest, inform my analysis. If anything, I like to know what everybody's thinking because it's, the biggest crypto channel. So it gives me an idea of what most people are thinking and how they're viewing the charts and the market. But yeah, you got to be discerning, guys. So much information. There's CME gaps. Some people say, oh, you can see there's a divergence here. For instance, if we were only beholden to our indicators, we see on the hourly time frame, this is oversold, or overbought rather, then we should expect a move down. And that move down maybe brings us down. Like, you have to, I think, a big skill in really getting to the next level as a professional trader, you have to know when things are important. I know that if I'm dealing with trending markets, right, an actual impulse, I'm not putting much weight on my momentum indicator on a small time frame. I'm just not doing it. The only momentum indicator that I'm putting weight on is probably the weekly. And even then, I would not be surprised if my weekly indicator did something like this, right? Or something like this. Even the weekly indicator is going to hover in oversold or overbought territory, right? In a trend. So again, you have to know when things make sense to look at. Not everything is relevant all the time. Would not be surprised if, despite being overbought on the hourly time frame, this move happened and we went up. I wouldn't be surprised, And for instance, another example of this is on BitBoy's channel. This morning they were talking about Genesis, digital currency group, the Genesis branch. They are going bankrupt. And there are big players in the crypto space, right? And, people are saying, oh, that's definitely going to take the price down. People like Garrett Soloway say, that is what brings Bitcoin down to my target of 9K. And, does it though? Like, because my technicals don't say that. And that's also something, like, you got to think about. Like, are you doing technical analysis or not? Because technical analysis has nothing to do with your thoughts on, if something's a black swan event or not. You should see it in the chart. Unless, of course, it is a black swan event and it fundamentally changes the underlying value of the asset, in which case you'll see it on the charts. Otherwise, you do technical analysis. But a lot of these analysts, they talk out of both sides of their mouths. They say, oh, I'm a technical analyst and I don't pay attention to the news, but they're the same people that say, well, this is going to go down to this level because, Elon Musk did this, or because Genesis is going bankrupt, So again, what's relevant? You have to use your own discernment. It's no easy answer, but I don't really look at CME gaps. Long story short. So Akanksha says, I'm so excited. Me too. Justin says, my target right now is 21,730 to 21,830 zone for the next short scalp, but we'll wait for the reaction. Akanksha says it's her first bull market. And Justin says Bitcoin has a lot to prove before next bull run to be given. What do you think about Solana? So I'll answer Akanksha's question first, and then I'll answer Justin's question. Solana has serious developers, I believe. I told everybody that I did invest in Bonk, whatever it's called. It's like the ultimate shitcoin. It actually does have a use, right? It's not like, and it's done with all seriousness, for a good purpose. I respect it. It's not going to save the world. It's just for fun, but it's a serious meme coin to me. I would not be surprised if we look at Bonk a few years down the line in the same way we look at Dogecoin, okay? Or maybe what's the other one? There's Dogecoin and there is Shiba Inu. But I think it's even a little more serious than Shiba Inu, okay? So Solana, I think, technically, and I've said this before on the channel, I did not like the way the chart looked after the FTX debacle. It looked like a failed project. It may be okay. I definitely saw a lot of vulnerabilities on the chart. Like, it was breaking crucial supports that shouldn't have been broken. Can it survive? Sure. But would I invest in Solana for this coming bull run? I wouldn't, and here's why. There's no point. There's no point in me taking that risk when there are 20,000 other assets, 20,000 other projects that I could invest on that may have much less risk profile. Because when you talk about risk, it's not just protecting against downside risk, putting in your reads on the chart. It's also, fundamentally speaking, what are you investing in, right? When I first started the channel, I used to do a lot of fundamental analysis and say, okay, this project is good and that project's good. I still do it. I just don't post it. The fundamental analysis is important, but only insofar as it's a viable project and it's not going to disappear overnight and it's not going to rug or be exploited through a hack, right? It's a serious project. When I look at my positions, the positions that you guys see on my watch list, I've vetted for that because I'm hoping that these assets last without incident for the 3 to 4 months I need to hold them before divesting myself of the positions. And I've thought of that, okay? Not that, very little DeFi for that reason, because even if a project is really good, great team, everything dotted and T's crossed, all you need to have is a bridge hack for that project to suffer an exploit, and that affects the price, that affects the chart. So very little DeFi. I've thought of it, okay? A lot of these projects you see, I'm not taking much risk given the fundamental nature of the asset. I wouldn't invest in Solana, not because I don't think it has a chance and that the development is serious. It's because it's unnecessary risk, right? Why risk that when there's so many different layer ones that are very promising that present much less risk? So that's my answer. And then talking about Justin saying this move up was swift and with good volume, but it left little support. So if we move down, it will be just as swift. So Justin, the support, I disagree with you on the support. Like I've been saying, if you look at the chart, it's the support you're looking for is exactly that. This, where's my pen? Here it is. This is the support. And I think the way Justin's looking at this is in terms of what most analysts, most crypto YouTubers, the way they look at this. They saw. Okay, let's look at this really quickly. Hopefully this is useful, right? And this is just my opinion based off my, experience, based off everything that I know. People are thinking like this. They think this is a bull run. That's why people think like what Justin's saying. Like, Justin's looking at maybe the 15, 20, I don't know what chart you're looking at, but their targets are so small. Like 21.8 to like 20. Like, that's not a bull run. You're still thinking, people with targets in those regions are still thinking of small time frames. They're still thinking of sideways consolidative price action, little moves here and little moves there. If you think this was a bull run, and technically it made higher highs and higher lows, so in that way, yes, but really, if you think about it and you look at the chart, it wasn't a bull run. It was part of this contiguous corrective pattern, and that is what you call a bear market rally. So, but if you think this is a bull run, I understand why people are saying 2023, and I think this is a pretty mainstream opinion. 2023 won't see a higher high. 2023 will get a comparable move, maybe to 40K or something like that, something like this. And this is a direct result of not being able to read a chart, to be honest. And no disrespect. I mean, I'm not saying everybody's doing this professionally and actually knows how to read charts. So I'm not disparaging anybody, but I'm just stating the fact. That's not a bull run. So what you see here, if you want to, if people think in this way, I think it's more akin to what is more likely to be seen on this side, okay? But most people aren't thinking that way, okay? And then to your comment about support, there's no support. So Justin, if you were to put this as your previous bull run, okay, and this as your correction, and then a continuation, this is your consolidation of this drawdown, and then the continuation is this. How would you go up like this? You don't go up like that. Maybe you go like that in the beginning, right? You hash out, or you do overlapping sort of matriculation upwards in the beginning. But eventually what you're going to have to do is you're going to have to put in waves that are long, waves that are big, and those waves go. And I understand why people that are so used to this 230 days of price action, I don't know when you got in the market, Justin, but a lot of people get in maybe 100 days prior, like they've only been in the market for 300 days. Most of what they know is that sideways price action. They don't even know what it feels like to go up like this. Okay, and mind you, this is a log chart, so it looks like it's conservative, but it's not. This is, if you put this on an arithmetic chart or linear chart, it looks a lot more imposing. That's what happens in a bull market. You get consecutive days of green, then you get some retracements. Those retracements are modest. That's why we call it impulsive price action. So yeah, that's my answer to that. The support that you're looking for is the top of this range. You don't put in random supports here and there, and that's not how it works. But anyway, let's keep going. Yeah, Akanksha says, Phantom's my other choice. Yeah, just do your research. Go on CoinMarketCap. Try and look at... I always look at the history of exploits on each blockchain, each project, to see, okay, how did they deal with these hacks? how were things divested, you got to do a little bit of research. Phantom did have a hack. They did have an incident. Just to see how they dealt with it. But there's so many projects that have been really good, have not had any hacks. There's no shortage of really strong projects with no drama. That's all I'll say. So Justin says you have some support at 19.2, and for me, more local 20k. Psychological Zone also have the CME gap just below, so it's good confluence with them both together. For me, there is also local support around 20,700 that would offer a long scalp. Me personally, I hold shorts from very high up on multiple assets, so I'm a perma bear. For me, my bias is to the downside still, but I will just trade the charts and data that's given to me. I'm also quite bullish medium time frame, though all depends on what the DXY does. Yeah, if you are a perma bear, or yeah, I think that's what he said. Yeah, a perma bear. Yeah. Justin's been a trader for 13 years. So you've been trading mostly Forex or traditional. Anyway, Justin clearly knows what he's talking about in terms of, just trading prowess. But yeah, I don't see anything bearish about this. Obviously, what's bearish is that we just came out of a bear market. But as far as insofar as we're moving out, I don't see anything bearish about this chart. Let's see. Yeah. So let's keep going. Let's have a quick look at the DXY. Justin mentioned that. So the DXY is looking good for continuation to the downside. We all know that this is the main indicator that we use on this channel. And, a lot of people ask the question, they pose the question, where's the money coming from? Okay, some people are bearish because they think there's no way Bitcoin can put in a serious move because the economy is not good enough, there's not enough spending, not enough people are going to buy Bitcoin to make that jump from, 20k to wherever, 30k or anything like that. A lot of people think that this multi-billion-dollar asset class moves off of, random buys and sells. And I always say on this channel, most of what moves this market is the underlying asset. And it's the same thing with most markets. People just don't understand how it works. Okay, really quickly, if you have Bitcoin, because we have a lot of new subscribers, I'll just break this down really quickly. Okay, so you take Bitcoin, okay, and you take the dollar. Okay, that's essentially how it works. Bitcoin goes up and down mostly because the DXY goes up and down. The DXY is the underlying asset. The dollar, the US dollar, is the world reserve currency. It is what 60% of all trade happens in, okay? And the DXY it's just a relative measure of the dollar's strength vis-a-vis other world currencies, major world currencies, all right? In particular, the Swiss franc, the Canadian dollar, the pound sterling, what else? The Japanese yen. What else are we missing? The Swedish kroner, and then there's one more. But when you look at the DXY, it's really interesting because over the 12-year period, 8 to 12 years, I forget how long this is. I don't know why I can't commit this to memory, but it's about... So I put this chart up that I did many months prior on the channel, and you can see from 2014 to present day, so that's about 9 years, okay? You can see on a monthly chart the DXY and Bitcoin, right, which we use as a proxy for the cryptocurrency markets at large, they're diametrically opposed. They're like mirror images of one another. They're inversely correlated, direct inverse correlation. So you can see how if the DXY goes up, Bitcoin goes down. If DXY goes down, Bitcoin goes up. This is a fact. This is why it's my main indicator. I don't look at all that stuff people look at, okay? And just, to answer people like Justin, the traditional markets aren't crypto markets, right? I know if you can read a chart, you can read a chart, but there are some important differences. One, we don't gap. There are no gaps in the crypto market. And we don't really care when trading happens. Although, you will see most of the moves being done when the DXY opens, on Sunday evening, right? Eastern Standard Time, because this is what really moves the markets. And I believe that this is what moves the S&P, the NASDAQ, by and large. Obviously, there's some movements in smaller market cap projects that can be done through buying and selling. But most of the volatility that you see in Bitcoin, in crypto, where the money comes from is the dollar. Okay, and so when the dollar is perceived to be relatively less strong, okay, and I'm on the 4-hourly chart. For those of you who are not familiar with this chart, this is the high time frame chart of the US dollar currency index. We charted it. We've had this chart and haven't changed much of anything on it for many months on this channel, okay? For many months, we've tracked these cycle waves. And essentially, for those of you who don't understand Elliott wave theory, or, this may seem a little intimidating, what this chart is saying is that the US dollar has been in an uptrend for about 4,200 days. I don't know how many years that is, but for a while, since May of 2011. So that's about 12 years, yeah? So in September of this year, we said that it was likely to reach a top, because I was reading an ending diagonal, okay, in this cycle wave 5. And that's exactly what we got. We got a move that signaled the end of that 12-year rise in the dollar. And since September, we've fallen and fallen and fallen, okay? And our target is actually down here between 96 and 98, because in Elliott wave theory, once you get out of an extended wave, your initial breakup structure typically targets wave 2 of the previous extension, okay? So we have here the what is this? This is the primary. This is intermediate wave 2. Yeah. So we have our target to be around here. So that's like my uber technical target. But then also, if you just do support and resistance, and because we've channeled this entire 12-year run, I wouldn't be surprised if the target was just the base of this massive 12-year channel. Okay. So the DXY is definitely on a downturn. For people thinking that Bitcoin and all risk-on assets are going down, they might not be looking at this, or may not be able to read this. So many things that are bearish about the DXY on the high time frame, right? This is another very nice trend that has just been broken to the downside, as you can see, right? Since June of 2021, like the primary waves of this cycle wave 5 have been going up on this trend. Okay, met it, danced on it, broke it, retested it, now coming down. Okay, so that's the high time frame. The DXY is bearish. If the DXY is bearish, Bitcoin stocks are going up. Question is, how will they go up? How high will they go up? That's the question. Not if we're bearish or bullish, because as we can see, as we saw with the previous chart, we have 9 years of data to show that on a monthly high time frame, when the DXY goes down, Bitcoin goes up. Okay, and there's also a ton of other indicators, on-chain indicators, but let's not even talk about that. So what we're looking at here on the smaller time frames is a clear breakdown, all right? And you have here what looks to be an impulse. This looks to be some sort of complex correction. This looks to be a continuation of an impulse. This looks to be another intra-wave correction. Do expect that to continue, all right? And so now back to the original small intraday time frame, you can see our momentum indicators are telling us that the 4-hourly time frame is topping out. And whatever this is, this intra-wave correction, it is right now looking like some sort of head and shoulders. And we all know, those of us who do pattern analysis, head and shoulders are typically bearish reversal patterns, right? That break to the downside. So I do expect this to continue to the downside and to usher in a big move in Bitcoin and in crypto, right? And that will not just mean a small time break, that also means a break, of this important support level right here that you've held since May, okay? And May, if you understand crypto and what's been going on with Bitcoin, May was the beginning of our consolidation reversal pattern, right? That's when we started building and absorbing all that supply dumped on the market for most of cryptocurrency. Actually, for Bitcoin, it started in June, but for most crypto assets, that started in May. So this is basically coming back full circle. This was the bear market right here. You went from the bull market, the bear market was, this was the bear market accumulation rather, okay? And now, if this breaks, that corroborates the beginning, of the bull market. Okay, so that's the DXY. Nothing's really changed. We looked at Bitcoin dominance yesterday. We're not going to do that. Excuse me. So Justin says, Bitcoin could absolutely rip people's faces off to the upside because it's a very low volume environment right now, and all as it takes is somebody with the means to move the market to kick off FOMO. See, I disagree. That's not what moves Bitcoin. Right now, even where it is at 20K, Bitcoin is around $400 billion of market cap, right? To move that market, even collectively, we'd have to inject billions and billions of dollars. 1% of 400 billion is $4 billion. I understand that a lot of the market cap calculation is kind of screwy because you're dealing with a lot of futures. You're dealing with a lot of paper money and the Bitcoin, actual hard Bitcoin that exists may not be what we think it is. Still, at no point in time is Michael Saylor or any other big whale putting in multi-billion-dollar buys on chain. We haven't seen it. If there is, we haven't seen it. And, because it's not like traditional markets, we can see transactions. We know on the blockchain when a purchase is being made, whether it's over the counter or not. And I haven't seen any multi-billion-dollar purchases, right? It doesn't happen. It has to. If it happens, it will be on chain. So that's not what moves the market. What moves the market is the underlying asset, the dollar, that loses relative strength. And I don't know if I explained this or not, but I did explain it. But just to reiterate, again, if Bitcoin is in the numerator, that's what you're buying, and you're using the dollar. If the dollar that you used to buy Bitcoin with decreases in value, then automatically, without anybody buying a sat of Bitcoin, your relative value for Bitcoin goes up in dollar amount. That's all that this is. That's what the perceived, one Bitcoin is one Bitcoin. The perceived value is what we're talking about. The perceived value of Bitcoin is going to go up in dollar amount because the DXY is going down. That's what that chart that I showed with 9 years of data has proven, right? Obviously, little buys here and there, they make a difference. But that's not what we get parabolic growth from. People all of a sudden choosing to buy Bitcoin because the Fed says something like, I just think with all the data we have, all the information we have, all the tools we have, that's an antiquated it's kind of like a fairy tale. What people said, it's a narrative. People have explanations for everything, right? But where's the data to support that? Where are the buys on chain to support that? That's what moves the market. There are none. All right. moving on. Let's look at our altcoins and get out of here. So we've looked at Bitcoin. We looked at the DXY. And now let's see what our altcoins are doing. It looks like we're getting a bit of a breakout from this area, okay? But what we're going to want to see, like I said, is a continuation of that, a clean break of this channel, right? Of this consolidation channel. All right, let's move on. So Cardano, looking good. Kind of like the same thing as Bitcoin, okay? And again, as we said yesterday, this entire channel, your consolidation channel for the bear market, you've broken it to the upside. It's not good enough though, because you've done that in the past, right? You've done that in the past. You've done that in the past. What really separates these breaks of resistance from this is the fact that you're RS flipping it. You're turning old resistance into new support and you're continuing. That is what really separates this move from the previous and why it's likely that we get a big move up and out of here. Okay, so that's just on the daily time frame. The smaller time frames, what we saw in Bitcoin is similar. Yeah, you had this running flat correction that created a sort of channel, and you're working your way up and out of the channel. Okay, so that's Cardano. Algorand. I have this line in because I have to sell this position at this point because I have to rebalance my portfolio just because the exchange that I'm trading on, Phemex, no longer wants to deal with US dollar denominated contracts. They only want to deal with USDT contracts, which I prefer. USDT contracts are the future. It's just so much cleaner. And so much more precise. There's so many more decimal points, all that stuff. I like it. But yeah, that being said, I have to sell this position, and that's when I'm going to sell it and turn it into some more positions, hopefully. So that's what I'm waiting for. That's why you see that line there. It's not relevant to the analysis. In any case, again, as we demonstrated yesterday, let me get rid of the momentum indicator. We don't need it. What is important is not just a break of this channel, okay? Because you can see in the past, we broke the channel and broke below. What we want to see is a break and retest. You have to turn old resistance into new support, or else it's not valid. And that's what it looks like we're doing right here. Yeah? So this is Algorand. Alright. Bonk. So this is my fun play. Like I said, this is on the Solana network. Again, this is a spot buy. Highly volatile. Didn't put much in it. Highly risky, but I'm practicing what I think is good risk management. I'm not putting much in it. But I do think that this will do well. I really like the idea behind this project. Anyway, not much analysis to be made there. Dent. Again, this is the most compelling thing about this move. Going up, retesting old resistance as support, and then continuing. Okay? Very promising. And again, that old resistance is the top of your bear market consolidation channel. And in terms of the strength of trend, this trend has lasted 300 and some odd days, 330 days, I think, since May 12th. Oh, sorry, 253 days. I don't know where I got 330 days. 253 days. Okay, so that is a strong trend. As you can see, we've broken that resistance in the past, but what we've never done was break and retest. That is why this stands out. And I mean, it's a lesson to us all. It's not just about making the higher high. It's not just about the price. It's about price action and what's being done. And in this move, you can see what DENT is doing. It's putting in what seems to me to be a running flat. Do you see that? So it went up, and it did a three-wave corrective move where the impulsive portion of the corrective move stopped short of the previous resistance, made it new support, and continued. Okay, that is the technical end of this bear market accumulation, if that continues. Dodo, we're still in this bear market accumulation channel, okay? As you can see here, you spent 250 days, whatever. Let's see, is it 250 days? Yeah, 250 days doing your 2 degrees of AB basing and a pivot, like consolidating in this channel. And you've had instances of wicking above the resistance, yep? But that isn't important. It's not about the price. It's not about making higher highs. It's about holding levels. And I know a lot of traditional traders like to look at candlesticks and say, if this closes above, and they look at where the body of the candle closes. I don't think timing in that respect is as important in crypto because we're not on the work week. We don't have, start the day at some hour and close at this hour. So I don't think it's as relevant, personally, in my trading experience, to look at where candles bodies close and open. I just look at, the candlesticks holistically, both the wicks and the bodies. And so when I'm seeing the price action hit the top resistance of this consolidation channel, this 250-day consolidation channel, and not reject, again, but consolidate at resistance, that is a great sign for continuation. And never have we, in the past, consolidated at resistance. As you can see, every single instance was a rejection. Yeah? You see a quick rejection with the big wick, right? Big wicks signifying a quick move from that area. But you can see here, there's no such wicking, okay? You came and you held your position above that midline, right? And you're pretty much just at the resistance consolidating. Do you expect to break it? Obviously, a break would necessitate a quick retest and then a continuation. I expect that from Dodo. But this looks good for continuation. And again, we look at Bitcoin as a proxy for the cryptocurrency market at large. Bitcoin comprises 40+% of the entire cryptocurrency market cap. It's a good it's a good bellwether of what the cryptocurrency market's doing. But these smaller cap altcoins also give you insight as to what the market is doing. Don't ignore that. They may be a step behind, as in what you see with Dodo, right? Like your Bitcoin has already broken the channel. Cardano has already broken the channel. This is yet to break the channel. But when it does, it will probably run more than Bitcoin does. Smaller market cap. Dogecoin broke the channel, came back, retested it. Do expect some continuation. It's very clean retest right here. Okay, and that retest in terms of Elliott wave analysis is a clear wave 2 correction. Okay, comes between the 382 and the 618 of that prevailing 5-wave sequence. And the time, if you look at the time factor, the time it takes for that wave 2 is approximately the same time as it took for that wave 1 to form. So this is a really good sign for continuation. Here, very clearly corrective. Right, 3-wave move. We know 3-wave moves are corrective. 1, 2, 3, 1, 2, 3. We expect that 1, 2, 3, 4, 5. Here, this looks like pure impulse to me. Okay, in the past, it's just a bunch of 3-wave moves, series of 3-wave moves. Right, that was the that was the consolidation reversal pattern that was taking place. Okay? Ethereum, as you can see, we're well on top of that bear market accumulation channel, and right now we're about to break out of your smaller time frame channel, making this bear market accumulation as support. That's what's most important. That's what's most telling and compelling about this move. Here, you seem to have gotten some sort of similar move, but we broke down. Okay? We did it. We broke down. So, if you're bearish, you may want to look out for that breakdown, right? Even if you do retest the top as support, who's to say that you're not going to break down? It's a good question. I would say that is the only thing I would say, okay, that would make sense. But then again, we're factoring into our larger analysis, what the DXY is doing, what Bitcoin's doing, all that stuff. So, Litecoin. Here we have a move that seemed to already retest the top of that accumulation zone back in early January with this move right here. Okay? I think that this is an impulse that is just in intra-wave consolidation. And actually, if you look, it seems as if this level right here, or look, you can, I like the way I drew this, but you could also make the case that the top of the range is here. You could also make the case that the top of the range is here. I don't like that because I basically designate the top of my range using that initial break of structure, which is here, okay? And so that starts my count of these AB bases, right? My A wave, my B wave, so on and so forth. But this is a clear level right here, as seen by this move, this small move right here. So you can see that we're basically treating this level, this last little bit of resistance, as support and moving up off of it. So that's what I see with Litecoin. Looks bullish, looks nice for continuation. Reserve rights. You hit your head on the midline. Again, in a channel, the top is resistance, bottom is support. The midline is resistance if you're below it, support if you're above it. We definitely saw that as resistance. We came down, but again, we're consolidating at resistance. A rejection and consolidation at resistance are not the same. Okay? This is consolidation at resistance. That's quite bullish. Shiba Inu. Very nice. You overtook the midline. Okay? And what you did is you hit the top. You did a bit of consolidation at resistance. But because it's Shiba Inu, of course, it's a lot more volatile. And you look to be finishing that off. On this time frame, it looks like a big rejection. But if you go on the 4-hourly time frame, I think you see what it is. It looks like a leading diagonal. Okay, it looks like a leading diagonal. That's what it looks like. Okay, and we know these leading diagonals look like that in Elliott Wave. So that's what I'm seeing with SHIB. So Justin says, leverage is a hell of a thing, bro. Yeah. Oh, yeah, definitely. Leverage makes up most of our market. And Justin asks, so what's your target on Bitcoin and why? So I'll do this really quickly. I've done this before if you guys are familiar with my work. but because there are many new subscribers, I'm just going to do this really quickly. So let me try to be concise, and then we'll finish out our altcoins. So going on the high time frames, this is been something I've worked on for quite a long time, Justin and everybody else. You know, I'm an Elliottician. That's basically what I use to make sense of the market. I think Elliott Wave is great. It's just a tool, though. It's not a magic wand or anything like that. It's a tool like any other tool. You have to know how to use it. And in Elliott Wave theory, we count waves, and we use degrees to make sense of the wave count. Okay, so the highest level degree is your cycle wave count. You can see that in blue. So basically, let me back up. I took a chart of Bitcoin against the US dollar since the beginning, okay? Because I wanted to understand where we were in Bitcoin's price movement. And, you know, this is a 14-year asset, almost 14-year asset. But it's a little tricky. So I took some time and I tried to make out all of the different cycle waves. Then within the cycle waves, think of Russian dolls. If you're not familiar with Elliott Wave theory, you have waves within waves within waves. So it goes cycle, primary, and then it goes intermediate and minor. Okay, so here we have 4 degrees. The blue is cycle, the highest. Okay, so I have cycle wave 1, 2, finished. I think we're in cycle wave 3. Okay, now pay attention to the red. That's what we call the primary wave. Okay, in cycle wave 2, or sorry, cycle wave 3, you have 5 primary waves. Okay, so Elliott Wave theory is it's what's the word I'm looking for? It's recursive. It's what's the word I'm looking for? It's a it's like you have one in the other in the other. There's a word for that. I don't know why I can't think of the word. But in any case, the primary waves that you see here are the cycle wave 3 primary waves. So 1, 2, 3, 4, 5. I think we're in primary wave 3 of cycle wave 3. Okay, moving on. Now I'm looking at the intermediate waves. The intermediate wave count is green. Okay, and there's a way. This isn't just thrown on. There's a way to confirm your wave count. Right, there's a lot of different principles and guidelines that you can use as an Elliottician. You can use the principle of time and price. So typically wave 1 retraces to between the 0.382 and the 618 Fibonacci retracement level of wave 1. Sorry, wave 2 retraces to between the 0.382 and the 0.618 Fibonacci retracement level of wave 1. And it takes just about the same amount of time to print as wave 1. So that's one way you can kind of double check your counts. I know some Elliotticians have wave 2 going down all the way to 90%. I disagree with that. But whatever. That's not the I'm not going to talk about that here. What else? So yeah, I just, and then you can count the waves. Obviously, you can count 5 waves each time. So I did this work on multiple time frames, but this is the weekly time frame where you can see it all. Okay, and so now I think that what we're dealing with is a minor wave. So I count this as minor wave 1. I think this is quite clear, and irrespective of my larger wave count, I think what you can see here is this is a flat correction. Okay. It is a corrective wave, happens in three motions, okay? And the capitulation, or the final move, was March of 2020 pandemic crash, what most people call it. That was just a run-of-the-mill flat correction. Actually, it was a running flat correction. And from that, you got a 5-wave move. That was your preceding bull market. After that, you got a 3-wave move down, okay? Again, we use the guideline of I call it the guideline of comparability, or like, some people call it the guideline of equality. I don't like to call it that because it doesn't have to be equal, but it states that Elliott waves 1 and 2 are typically comparable in time and in price. The comparability in time is they take more or less the same amount of time to form. So if you measure on a smaller time frame, but we're just going to stay on the weekly time frame for in the interest of time, wave 1, if you go on the daily time frame, it takes about 400 days to print. It took 400 days to print that wave 1. If you look at this wave 2, it takes also around 400 days to print. Okay, I know it looks really, crazy, like 385, 441 days, like I showed you, but we're on the weekly time frame. If you drop down to the daily time frame, you can see that the wave 1 and the wave 2 take about around 400 days, which is what you can expect, what you should expect for wave 2 correction. The other thing is, so that's the comparability in time. The comparability in price is you expect wave 2 to come between 382 and 618 of wave 1. Typically, actually, more often than not, between 0.5 and the 618 of wave 1. That's exactly what you have. Wave 1, wave 2 comes almost exactly to the 0.5 Fibonacci retracement level. That's a very, very likely wave 2. Again, this analysis right here of Bitcoin from March of 2020 to present day, I'm calling it minor wave 1 and minor wave 2. That actually doesn't affect anything I've looked at. So it just so happens that I think I have the whole picture, right? This is a work in progress. But even if I didn't, this is very likely a wave 1, wave 2 situation. That being said, what comes next is wave 3. Wave 3 is projected in Elliott wave theory very simply by using the trend-based Fibonacci extension tool, taking wave 1, retracement of wave 2, and projecting it to the phi ratio, which is the 1,618. And actually, it goes between, wave 3 typically comes between the 1,618 and the 2 Fibonacci extension. 1,618 Fibonacci extension is at 1.4 million, and the 2 Fibonacci extension is at 4.2 million. That's my target for Bitcoin for minor wave 3. And the minor wave 3 is what I believe is the next bull run. As I said previously, this was the trend. This is the counter trend. The trend continues like so. Okay, so that's my target, and that's why I have it targeted in that way. Also, in Elliott wave, we do tend to channel price action, and if you channel the price action, the top of this channel also falls between the 1,618 and the 2 Fibonacci extension. That we would call confluence. The third bit of confluence is that the wave 4 retracement, whatever it is, comes and hits in April, between March and May of 2024, okay, which is the projected halving of Bitcoin, which is really, really confluent because we would expect the halving to be the bottom point for the next drawdown. So I have us going up for the next bull market and then down all the way to between March and May of 2024 for the next bear market. That's why I have my targets the way it is. I can explain more, but in the interest of time, that's all I'll say for now. Hope that answers your question. All right, looks like we're moving. All right, looks like we're moving a bit. Anyway, let's go back to our altcoins. I have to pick my son up from school. Where were we? I think we're at synthetics. Let's go back to the 4-hourly time frame. Is this the right chart? I think so, yeah. So yeah, synthetics on the 4-hourly chart. Let's get rid of our momentum indicator. Again, in trending markets, momentum is tricky. You're going to see momentum in a bull market hover near overbought territory. You're going to see momentum in bear markets hover near oversold territory for quite some time. So you have to be a little more clever on how to use momentum in trending markets. In sideways markets, they're a little more it's a little more helpful on small time frames. On larger time frames, yeah, then you have to know what time frame you're looking at, right? What time frame the trend is that you are in. On a higher time frame, it may give you a little more insight as to what's actually going on. So synthetics looks like we just breached that midpoint, that midline, okay? We came up impulsively, consolidated at resistance of that midline, and now what you did is you broke that midline, retested it. You should continue to the top, at the very least, to the top of this channel. Again, channel trading is quite simple. The bottom support, the top is resistance, the midline is resistance if you're below it, support if you're above it, okay? So that's what I'm expecting with synthetics. I do expect us to come to the top, retest it, and then continue on. And again, this purple box, these purple boxes I have, represents the accumulation channels of the bear market, okay? I'm going to fly through because I need to prepare to leave the home. Tron, this is exciting. I showed this yesterday. On a high time frame, you're breaking a multi-year resistance, okay? You're breaking 630 days of resistance, right? As you can see in this triangle pattern, this corrective pattern, right? So multi-year resistance, broken, retested as support. This actually, according to this analysis, this asset has never been in a proper bull market. It's always been in correction. So if it's gone up only correctively. Yeah, that's very exciting. XRP, same thing actually. I don't see any bull market here in terms of proper, clean, corrective price action, or proper, clean, impulsive price action. It's all been corrective, and you've been in this huge counter-corrective move. Why is it counter-corrective? Because this is an initial break of structure. This is a counter to this. So that should yield a proper, clean, impulsive move, right? And it looks like you're just at the breakout of this. Right here, you can see. Something like that. Yep. Okay. Zilliqa. Same thing. You hit the top of that consolidation channel, right? You retested it as support, and you're breaking out. Again, what's really compelling about this is the fact that you're putting the RS flip. It's not important to make the higher high. What's important, and I've fallen for this so many times in my trading career. What's important is that you break, retest, create, make it support, then you're good to go. That's your support that you're looking for, okay? Looks like VeChain just about to break this important resistance, okay? Upon breaking, do expect a retest before breakout. Theta token, not yet breaking resistance, but kind of like VeChain, about to break resistance of a high time frame of resistance. Looks like Telcoin broke resistance, retested it as support, and is off to the races. This is up double digits today, I think. Matic. Here, it looks as if, at least on the small time frame, you've broken this channel of consolidation to the upside. You retested it as support. And again, doesn't matter if you just break and you break right through. You have to create the previous resistance as new support, or else it doesn't matter. But that is what's interesting about this move. That RS flip with that what looks to be a wave 2 retracement. DYDX, right below the midline, looks like you're about to break it, flip it as support, and continue on. Harmony 1, you look like you just broke that bear market consolidation to the upside, retested it as support, and you're continuing on. MOVR, looks like you're right under. MOVR is Moonbeam or Moon River. Looks like you're right below the main resistance of your bear market consolidation, okay? and it's likely that you break it to the upside. Self Key, super volatile, a small cap. I just like the idea behind this. I feel like it's a nice project. This is something I may go in on with spot. Okay, but it looks like you just pulled a really important RS flip right here of a high time frame resistance. Okay, so that is exciting. You know, these projects, a lot of them have been going down for years. Okay, for years. 600 plus day resistances broken to the upside. And again, it's not important that you made the higher high or broke the resistance. It's important that you retested the resistance as support. That is what's really compelling about these moves. Guys, that's all I have today. I hope that was helpful. I hope that was useful. Like, share, and subscribe. And I'll see you tomorrow. Take care.